Welcome back, traders. If you remember the last video that we posted on YouTube, or if you haven't seen it, you can go ahead and watch it now. You will see that we placed a short position here on the New Zealand US dollar daily. We may have placed it off the 4-hour chart, I can't quite remember, but we saw that there was a short position opening up. We had a stop loss set, we had a target set, and we can see that the trade is currently 50 pips in profit, which is giving us nearly $500 after the swap rate has been paid. So it's quite cool, you know, sitting in $500 profit. There are definitely worse places to be. So what I'm going to be doing today is we're going to be looking at how to split a trade. Now, we have done this before, but we're going to run over it again with the current trade that's running, and I'm going to talk you through the whole process. The first thing that we want to do is we want to check out the news, and we need to see what's coming up that might affect what's happening in the markets, specifically with the New Zealand dollar or the US dollar, because those are the two currencies involved in the trade that we're doing. So I'm going to head on over to jpmarkets.co.za. Under education, we have an economic calendar. We can go ahead and let this load up, and then we scroll down and we have a look for what is coming up. Okay, here we go. Thursday, July 12th. Now we're looking for US dollar. Okay, so we have some news coming out in 42 minutes, the core CPI, and this one is very important. We have covered this in some of the newsletters, so go through the old newsletters if you want to know more. It's also available in the online course. You can visit jpmarkets.co.za and register for the online course for free if you want to learn more about that. But for now, all we really need to know is that there is an important news event coming out that's going to affect the US dollar. And then we go and we see what else is happening on Friday. All right, nothing much. So really the biggest thing is this core CPI, and you know, there might be some other news coming out, but it's not financial news. Let's say Trump says something, or something goes and happens over in New Zealand. So keep an eye out for that sort of thing. But what we know now is in 41 minutes, we're going to be seeing some volatility in the market. So we need to look at our existing trade and decide what are we going to do with it. So here we go. This is where we entered. We are now down here, which is 500 points or 50 pips in profit. And we're in for a full lot, which is a fair amount. Now, this news event could push this further and give us more money, or it could reverse it and we lose all of the gains that we already have. So what I would like to do is split the trade. So what I'm going to do is select this trade, right click, and I'm going to go to modify or delete order. Now we can't actually delete an order, it's really closing it. And we're going to select market execution, which means it's going to do it right now as I do it. Now we're in for a full lot. And this is what splitting the trade is I'm going to close off half of my trade now by changing this volume to 0.5. And then when I click close, it's going to drop it. So take note of the size here at the bottom. You see it says 1.0. This means I'm in the trade for one full lot. I'm going to close off half of the trade. And now you see that half is left. So we're still in that many pips profits, but we've now halved the amount of profit of existing trades. But don't worry, if you look at account history, you'll see that we have banked that money. So now that $248, which is half of what the profit was at the time, is now banked. That's yours. Nothing can happen to that. So the next thing that we want to do is we want to take a bit of a risk on this upcoming news and say that, well, I believe that the news might work in our favor, or it won't have a massive effect and it won't change the direction of the market. So we can go ahead and what we do is we take our stop loss, which was all the way up there, and we're now going to bring it down to our entry point or slightly below it, just to help cover the spreads. So now our stop loss is actually slightly in profit. Now what this means is if the market does suddenly shift around, it's going to trigger our stop loss before it crosses over. Now you may need to pay a little bit in spread, or if you're holding the trade for longer, a bit of swap, but you're not really going to lose very much. You could pull this further down and then you definitely won't lose anything, but we're basically in what we call a riskless trade. This means that our trade is already at enough profit that if it does turn around, our stop loss being in a bit of profit here, we can't lose money on what's left. So we've already banked $248. We're still in the market for $248. And even if the market does switch around, you know, you've got that $248 in your bank, that's yours. and we can't lose on the rest of this trade. So now we need to double check and just make sure that everything is happening the way we're hoping it will. We were saying that this is a bearish movement in the longer trend. We checked the highs. We saw we had a high here, a lower high, and now we have a new high that's being confirmed over here, and this is lower yet again. So the highs are confirming these are lows. The highs are confirming that this is a bearish market. When we look at the lows, we have a low here, and this is what we call lower lows. So that's also confirming. Then we went and we checked out the news, and we saw there's only one big news event coming out in 37 minutes now. And this is, we don't know exactly what that's going to do. But it did make us make a decision to go ahead and split the trade. So we banked our cash, and now we're in a riskless trade situation. So there's no major reason to get out of this trade just yet. It's moving along the way we're expecting it to, and we've made more money. But let's be a little bit greedy here. Since we're in a riskless trade, we can now extend our take profit. Now this does mean that it is less likely to hit, but we can squeeze a lot more out of the trade. In order for this market to continue bearish, like everything that we've looked at suggests it will, the market would have to break below this low and keep going and give us another low. So in order for this to be true, we should definitely hit this and continue down. So then what we do is we log in again tomorrow and we see how well we're doing. If the market has moved down to this support line here, the 0 line on the Fibonacci or the previous low, then we feel that we're on track, and what we do is we then move the stop loss into more profit. So if it does turn around, we'll probably cash out at about 20 pips profit, which will be about, at least $100 profit on top of that. And we keep following the trade until we're wrong, until the market has actually turned around. At that point, it'll turn, we'll close off in profits, and we're all happy. So this is the thought process behind splitting the trade, and it's quite nice that it's working out so quickly. 50 pips, it's a decent amount, but let's go for at least 100, shall we?